Hello, everybody. This is the weekly review for August 15th, 2015. Looking at the numbers, slightly higher last week, put on some gains. Had a big spike off of a big drop, very volatile week. Still positive other than the Dow for the year. If we, look through what happened last week and we ask ourselves, where are we and what's next? Technically and fundamentally, the quick review, so to speak, is that there's these abundance of issues, right, that have been plaguing this market seemingly all year long, yet this market remains at the highs. If we pull up a chart, the weekly S&P chart, you can see this range still sitting up here, nothing's changed. We come down, we test into the swing point low one more time, they buy it. They've bought it every time it's come down there, they buy it again. So the range still holds, still in effect, hasn't changed. On the technical side, right, we've got weekly basis on the various indexes showing us that we probably should bounce this week. So if we go back to the S&P chart and we look at the way this worked last week, what we did is we come down, we have a little less volume, right? We get under, back over. That says that we're going to try to bounce back up in here and test these tops again. So, technically, if you look at the market, last week was probably a positive more so than anything else. Same thing here on the NASDAQ, right? We've got that higher. The NASDAQ's even stronger, right? But if you had to draw your range, the range is in here. It comes into the second part of the range, right? So kind of the middle divider, and it's testing into that lower area and holding it so far. So at this point, the NASDAQ itself also lower volume, gets under, back over, same sort of scenario. NDX looks the same. And finally, if we look at the Russell, here we had that trend transition last week. It was this bar here. And this week, what does it do? Well, if you go back to the big bar that's out there, it's the top here. What does this do? It trades right into it, right? Has a lot less volume, right? This thing, more than any of the others, suggests some sort of a push back up. And where do you look for that? It's this retest regen off this prior swing point low, which we broke. And so the top of that bar, if we look at the top, let's get this out of the way. Here we go. If we look at the top of that bar to get the price point, it is 1240. So 1240, 1241, and we're sitting down around 1212. So 38 points or 30 points easy to the top side. Looks like the sort of bounce that we should expect. So coming into this week, the bounces look to be the story on these indexes. Now, the big story last week, of course, was the Chinese coming in, devaluing their currency, and creating that big spike down that we saw on the S&P 500. So if we pop in and look at some of the currencies of those countries that directly are involved, in Asia in particular, you can see the stock markets starting to get hit off the fears of what's happening, right? Their currencies are going to get stronger in the short run against the yuan. That is going to put pressure on their markets and already is doing so. So here's the Australian, all ordinaries, new lows. If we look at any of these that are directly affected, like Brazil, for example, Brazil making new lows, it actually has double problems now with the dollar appreciation and the yuan devaluation. If we look at Taipei, right, this one has been in a push lower and still is. Singapore, the Indonesian Straits Times makes new lows. You just go across the board. Even Hong Kong couldn't lift. So it's not just one, it's all, and they're all being affected as a result of what's happening in China. And that effect, if China continues to devalue, is going to be exacerbated, and that's actually going to be a big headwind if we see them come out and start devaluing again, because then people are going to wonder just how low they're going to take it. Elsewhere, Europe, finally rids itself of the Greek problem. They have approved the third bailout in Greece. Now they're trying to get the IMF to help fund it. That pretty much looks like it's over. Whatever benefits there is gone, and now you got the Chinese coming in and causing problems where problems look like they were solved. So if we look in Europe, here's France. France takes a big hit on the Chinese news. Germany does the same. And if we pull this back and look at it on a weekly, Germany, who's going to be hit even worse, because they're the main exporters out of Europe, they can come back down and test the low end of this range again. So, the big spike up, now you got a euro that's strengthening to some degree, and you've got this tax that was just put on your European exporters to China, and that's a big drag on those economies. Asian shares, we already talked about that. So that was the big takeaways last week. If I look at the technical positives and the negatives, the first thing we have to realize is that, the market's still bullish. I mean, we have seen, here's a monthly chart. We've seen this market for roughly, 4 years, 3 years, right? Pretty much straight up. Yeah, we've had a few little dips, like the one in October. There's been a few others along the way. But since August of 2011, 12, 13, 14, 15, just straight up. It's basically, and it is 4 years, not 3. So, when you look at it from this perspective, you can't help but appreciate the fact that this market's still bullish. The only thing that we're seeing now that we haven't seen for, other than back here with a little roll, right? Most of this, here's another one, you had little consolidations along the way and then little pullbacks. Here you have a large, long consolidation. Now, is that really the roll before we, come on back? Or is it just the consolidation before we go back the other way? I mean, that's the real question. What we do know is that we have to respect the trend. The trend's bullish. And so we can't lose fact of the matter, that, hey, this thing can still go higher. I have my doubts. I've expressed those, multiple times. But we have to recognize that until it breaks, right, until this range up here does break, this market, has to be given the benefit of the doubt on the long-term time frame. Okay, so let's go back over to the notes. Another positive is just these weekly charts in general all look like they want to try to bounce up this week. You can see it here on the S&P, right, where it gets under, back over. You can see it on the others like we talked about already. So that's certainly a positive on a technical side. You get these higher ranges that are still holding and so forth. And the money, it just rotates. It doesn't ever seem to leave this market. For example, when the lead sectors are struggling, then we see money rotate into those that are depressed, like the oil sector, for example, as a bounce trade. If we want to turn our attention to the negatives, right, we certainly have the negative in that every time we spike down, right, we leave some volume. So again, here, this was that big spike reversal, hammer reversal, volume left at the lows. The volume here, is certainly as much as the volume at these other lows. So in other words, we keep pressing down with volume comparatively, and we go up with a lot less. So those are negatives, but those, trend can continue even with the negatives as long as the weighting structure is supported. And right now that weighting structure still is supported. Another big negative, of course, was the Chinese devaluation. That puts a hefty tax on these other exporting countries. You saw it, already in all those graphs that I showed to start the show. Immediately it trends into lower exports. It hits the equity prices. A bit later on, those other countries are going to have to turn around and do the same thing and devalue their currencies. And I suspect somewhere down the road we'll see that. We'll see it in Japan. We'll see it in Europe. We'll see it in Korea. We'll see it elsewhere, right? They're going to have to bring their rates down to make their currencies go down so that they can increase their exports and take back what just happened with this devaluation out of China. All of this is going to make the dollar stronger as a result. Fundamentally, Greek deal is done. It's a positive on the negative side. I do think that devaluation is a negative overall. What would I be watching for the coming weeks? I would look, is there any hint that this Fed, whether they're going to move the rates in September, and will the market start pricing that in? That was the same thoughts last week. It's even more so this week, because, you know, every time it looks like that is what's taking place, then something comes along and says, oh, wait, they can't raise rates. For example, the devaluation out of China this week, all of a sudden that plays as, okay, the Fed can't raise rates. It's going to make the dollar too strong. I realize that all these things are out there, but I also realize that from everything I see about the Fed, they're going to raise the rates. And the market's going to have to price that in, and we just don't know how big it's going to be and when it's going to start. Technically, we're got the bounce set up. If it doesn't bounce this week, then that's a negative, right? I mean, you look at that and you say, hey, it should, it didn't. When it doesn't do something it should do, that tells you something. And when you see that, right, then you use that information to try to make a decision about what is probably going to happen next. So, I think that will be a tell if it doesn't happen. And then I think the other big thing to do is watch all these countries. They're all pressing lower. They're all stretched. Maybe they get their bounces here. Maybe they just fall out of bed. If they fall out of bed, if China starts devaluing more, in other words, if they pick it up again where they left off last week at the beginning of the week, then we're going to see, even more volatility come into this market, and this bounce potential that seems to be set up here on the indexes is probably going to fade pretty fast. Next week, there's not a lot on the economics. Earnings are basically over. The last big companies report this week. The Fed minutes come out this week, and that's PM numbers at the end of the week, and that's about it. So not a lot there. What's the bottom line? We're basically a month away from what's likely a Fed hike. The market is going to price it in, and then they probably will buy the news. So that still has to be priced in. I don't believe it is. We haven't seen, I guess I should have said we here, I guess I'll correct that. We haven't seen any real movement to price it in, and we haven't seen that currency devaluation. We have seen it disrupt the markets. If it starts again this week, it definitely is going to, tear the markets up again. Europe is likely hitting the first stall period. If you look at the numbers that are starting to come out economically, there's a lot of anticipation. That's what runs it up to start with. Then you kind of get that lull, and we're in that lull, and now you have the devaluation in China that's, affecting it. You had the Greek situation that was affecting it. Now you have probably economic numbers that are going to be slower that are going to affect it until they come out and raise that, intervention that they're doing on the QE side, or suggest that they are. Then the markets are going to, feel the effect, and I think that's going to continue. So that range trade is going to continue. Technically, we're still in a range trade here, and when we get a break, up or down, I suspect it's going to go fast. And so that's the danger point that we have to keep watching for. And as I said before, roughly now 39% of this market is lower than it was in October. Didn't have any member questions this week, so I'll skip that. Portfolio didn't really do a lot. Sold off some stuff, got rid of some stuff on the devaluation in Europe. Unfortunately, didn't get them out fast enough. Ended up taking worse prices than I should have. Put on the other side of that GLDI slash DGZ. We put the DGZ back on. I haven't talked about it, but and I don't show it in the portfolio, but the GLDI, one of the reasons for this trade was that thing gives you a dividend every month, and it continues to give us dividends. I don't show those in the portfolio because I don't take into account for dividends, but over time this is going to be a big deal and it's going to matter, and so just pointing that out as part of that trade. It's not just the raw numbers themselves, it's the dividends that you're pulling. Elsewhere, we added to PANW, we added S star bucks on the weakness. Didn't do much anywhere else other than get rid of some stuff. Weak and strong sectors here, and that's about it. So, where are we? in terms of this market, we're at the crossroads still, but I don't know that this week's going to answer it. I suspect this week is going to be range week again. It's just the only thing is can they push up and sustain up or not? And so if I bring up the numbers here again, I think if we look and say, okay, where's the key areas? The key area certainly is here because that's where it failed last time, right? But certainly this swing point high would be a big deal if you got over it. Now you're 4 bars in, so if we go 2 bars, this prints as a high, then of course this area becomes important too. On the downside, it's a swing point low. You break the swing point low and you stay down here, you're going to be breaking potentially on multiple time frames. So, these are the key areas, up here and up there. And if we get up there immediately, of course, then it's this high that becomes the key one. So, the range is here. This is the range. This is where we're looking. And if we just stay in this range, we're probably not going to know much more next week than we know this week. What we do know is we're getting closer and closer to the Fed hike. I don't think it's priced in. I think that's a real risk. And I think if we break, right, we're going to break faster than normal. And so that's the real risk on the downside. That's what we have to watch. So the key is, what do they do in this range this week? Do they break it out one side or the other, or do they just stay in it? My guess is they just stay in it again. Until next time, that's it for this week. Thanks. If there's any way I can help you, give me a holler, and I'll see you next time. All right, goodbye.